Welcome back to Instables. Again, going over our daily update on our intraday swing and long perspective here as we are leading into tomorrow's CPI. Again, that is our inflation report as we are bouncing here on our 20-day moving average, looking for that continuation on momentum as our 20-day has been crossing above our 50. As we have been continuing on above the upper end of our channel here, what exactly will be our bullish case scenario if CPI continues on lower? Again, our prior CPIs, our prior 4 CPIs have been lower. So again, that's why we had that move to the upside today. We had that anticipation of tomorrow's CPI continuing lower. Although if we do have a higher CPI, what exactly would be our bearish case scenario? And if we did continue on higher, which resistances do we need to continue on past to continue on higher? I'm going to go over exactly what we're looking for here. Hit the like button if you enjoy, subscribe if you're new to the channel, and if you are a day trader, if you're looking for pre-market news before market open, looking for those major volatile breakouts that you want to be watching throughout the day, go to instables.com in the description below, and for only $15 a month, you will never miss a breakout alert today. Again, let's jump into this one. So jumping into the daily chart with you guys here on the SPY again, as we are leading into tomorrow's CPI, again, as we have been getting rejections on the upper end of our channel, again, throughout the duration of the last year or so, as you guys can see, continuing on lower. And then as you guys can see, we have been looking to see if we can continue on above the upper end of our channel, and we have been continuing on higher, looking for that bullish candle structure on the up end of our 20-day moving average. As you guys can see, our 20-day crossed above our 50, and now we're looking for that bullish candle structure here. So again, leading into tomorrow's CPI, there are two outcomes that can happen. We have an increase in CPI. We possibly have a rejection on the up end of our trend line here, or we possibly do continue on above that upper trend line, and then our next resistance would be here, again, our prior here at 418. Again, holding above 416 is what we have been looking for. So in my opinion, if we do continue on higher, we do close above 416, then we can assume a continuation, and our 20-day curling up would show us that signal on that continuation on higher. So again, we were not in a major sell-off. We were not bouncing off of a resistance with that engulfing candle. So again, engulfing candles are usually effective, more so when we do have, again, a resistance to the upside and a nice bounce that we had intraday on that anticipation of that continuation on decreases in CPI. That is, again, very likely because our last 4 CPIs have been lower, although again, very cautious to the downside still, because we can easily continue on lower here with our increase in sell pressure that we have been getting. We would simply have a continuation on that increase in sell pressure and have our 12 cross and continue on below our 26 here. Again, we did want to make sure we were careful, as we mentioned over the weekend, because again, we were crossing here and we do not want our 12 and our 26 to continue on lower here, which in my opinion, if CPI comes out higher for any reason, which will give us that anticipation of possible increases in rates that some Feds have been mentioning, then we can have our 12 and our 26 continue on lower here, and that could possibly be that cool down. But again, overall, looking at our swing perspective, I wanted to make sure we cover our weekly chart. Very important here as we are getting a doji candle after last week. Again, after our momentum candle to the upside, we have been closing for the last couple weeks on the upper end of our channel, and now our 20 weekly moving average for the first time this week, guys, is curling up here for a possible cross. And then what we have to assume is that we would have some type of pullback into our 20 weekly moving average to, again, get that confirmation just like we were looking for on the daily chart. So again, if we do continue on higher, no surprise if we do have a possible cool down, and then possibly do continue to buy that dip, in my opinion, and look for that continuation. That is if our 20 weekly moving average does cross above our 50 weekly moving average. That is what we're on watch for this week, to see if we do cross above here and look for that bullish candle structure above our 20 weekly moving average. That will give us that continuation. Again, we do want to see exactly what tomorrow's CPI comes out as, but again, overall, the reason why we have been looking for momentum to the upside, the reason why we had a pullback and we did assume that we could possibly continue on higher going to today, is because here on our weekly chart, again, with our EME lines crossing above the median of our MACD here, has been showing us that momentum to the upside intraday, and assuming that we would possibly bounce on our 20-day rather than just drop below it. That's why we would be assuming that, is because our EME lines are crossing higher. And again, and continuing on with buy pressure at this point in time, but this very much will turn into a continuation on decreases in buy pressure, in my opinion, if tomorrow's CPI does come out higher for any given reason. So again, keep that in mind. That's exactly what can happen. And then our long perspective, again, our monthly chart is just opening here. So again, we are testing our 20 monthly moving average here. We need to make sure that we are keeping that in consideration, because we are, again, testing. We have to assume that there is some type of consolidation before we do possibly continue on above the upper end of our 20 monthly moving average. That will give us that continuation momentum on our long plays. Again, currently we are testing, and very rightfully so in my opinion, since we do need that increase in unemployment, and we have not been getting bad jobs reports, which would give us that increase in unemployment. So again, being cautious, seeing exactly which data comes out week by week is very important. And we mentioned this data in the Instabills room every single week, of course. Any movers that is worth looking at throughout the day, any news that is worth looking at throughout the day, we mentioned in the Instabills room. But again, very much testing our 20 monthly moving average. And if we want that strength, that possible continuation, which we have been, again, getting that strength to the upside intraday since our 12 EMA on our monthly chart has been curling. And we mentioned, again, that does show us that short-term momentum. But overall, we need a cross here to show that we're going to continue on with that long-term momentum. Very much on watch for our 12 and our 26 to cross here, and then looking to see if we can close above the upper end of our 20 monthly moving average on top of that. That would be very key and ideal for that possible continuation on higher. We will see exactly what happens. A lot of Feds are skeptical about any rate cuts to come. It seems like a lot of them have been mentioning that there's possible increases in rates to come. We'll see exactly what the data shows since they are data dependent. Now, again, with that said, guys, if you are a day trader, if you're looking for pre-market news before market open, any breakout that is worth looking at throughout the day, again, very nice breakouts today, in my opinion. Very simple plays today. Very nice plays in the Instabills, honestly. I hope you guys did catch any of those. Appreciate you guys for everybody that has been supporting the channel. Honestly, I really do appreciate you guys, Instabills. Much love to every one of you guys. Again, if you like the video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.